presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Brent in Martinez, California. Hey, Brent, what's going on?
How you doing today, Tom?
I'm doing great, man. You having a good day out there?
I am, thank you. I was really just commenting on the fact that I'm really enjoying the new format with you being there when the market's still open. You've assembled a great group of people. They're all great technicians. I'm just so glad that I first caught you on the radio with your little tiger growl. I'm like, who is this guy? And it got my attention, and it's really made a positive change in my life.
You're awesome, man. Thank you so much.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. And for all you folks up in Boston, my God, stay safe and make a big snowman and make a big cave. Not like a good snow cave, man. Let's take a look at, actually, I better make a good bear cave up there, I think. This is an unknown author. The start to a better life, or a better world, or a better future is simply to believe that it is possible. Market-wise, let's take a look at it out here. We have the Dow Industrials up 140, Nasdaq up 59, S&Ps are up 20, gold contract down $7, trading at $1,234 an ounce. Silver down 15 cents at $16.91 an ounce. Platinum down 11 bucks, trading out at $1,208 an ounce. Copper down 3 pennies at $2.55 a pound. Light sweet crude, that's down $2.76 at 50.110. You get the bond market. We have the 10-year down 8 ticks, 128.11. 30-year off 25 ticks at 146.25, and King Dollar up 253 ticks at 94.83. The euro is flat at 113, and the yen is up 80 at 119.44. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. We're going to start over here with the SPY, folks, okay? So, what do we have out here yesterday? What we had out here yesterday is this. Yesterday, you get to a lower price on the SPY. We got to 204.13. We had volume out here of 72 million. Thus far, you get into a higher high, and we get 73 million right now. So, what do we have? The 73 million, folks, is coming into the Friday downdraft. That downdraft on Friday, we had 125 million. So, can't bust it down. We couldn't bust it down yesterday. It's going to try to bust it up. It still doesn't have the juice to bust it up. We go to the 3 Qs. We take a look at the 3 Qs. What do you have with the NDX 100, the 3 Qs? Same type of setup. We'll see what can hold coming into the close out here. The 3 Qs, yesterday, you go downtown with 18 million. We've done 18 million thus far today. The 3 Qs also coming into the Friday downdraft, they had 34 million. You can see that correlation. The correlation is pretty intense. You're going up in an anemic volume, not just small volume. The index itself, meaning the Dow Industrials, you're dealing with, we went down yesterday on 776 million, which is very low volume. Today, we're going to go up probably on about 700 million, okay? So that correlation is still saying, guess what? Downtown is the name of the game. We'll see if, in fact, you get a rejection of price out here today. Thus far, the last basically 30, 35 minutes, this market has ran topside. If the number that you're looking for in the SPX, folks, would be right now the cash is at 2066. The swing high from Friday is 2072. I don't expect we're going to see that. What you can get is that if we get a close that's under the 2064.62, that would be the swing point of the 22nd, and that would be a failure there, because on the 22nd, what we have, we're not going to get near that volume. On the 22nd, what we did We did 890 million shares on the 22nd. So we'll see where that baby wants to close out and how we're going to come into this closeout here today. Gold contract. What do we have with gold? Okay, so check this out. This is pretty intense. And what it is this. We came down Friday with volume. Now, that volume that we came down on was certainly less than how we went up on the 15th of January. But, however, you came down with some good juice. What we're doing out here today, which is sweet for the bulls, is that we're testing that bar. I would have liked to see actually gold go a bit lower. We've hit 1230.60. It would have been great if it hit that 1228.20. Hasn't hit it yet. The reason being is that was the low. But what you are doing now is you're pushing into that level with dramatically lighter volume. The equities themselves, the gold equities, the silver equities, they're really acting good. In fact, there's quite a few ABC structures. They look like they're nice ABC structures on the way up. Deviant? Oh, baby, it's deviant in spades. Bonds. Now, let's take a look at the bond market. What do we have out here with bonds? So, bonds, if we start with the 10-year, what we have today is this. You're testing the low, the high volume swing low. We're doing it with dramatically lighter volume. The bond market, thus far, though, hasn't rejected that lower price. And what you'd be looking for is this. When we came down Friday, we came down with 1.8 million contracts. Today, we've only done 1.1. That 1.1, we're going into the sign of strength that was out there from January 6th. Okay, so it's acting correctly right now. We did 1.1 versus 1.7. So what you have here is this. You have a structure, goes topside, has volume all the way up. When we pull back on Friday, you have an expansion of volume, but it was lighter than, in fact, its strength. Now what you'll be waiting for is that the low of the high volume day, which is on January 6th also, is 127.23 in the 10-year. We've gone to 128.04. So you can get down to that level, test it with lighter volume, which it has right now, reject it, make a run for the highs again. That's one way of doing it. Another way of doing it is just coming back inside the 128.15, which right now we're at 128.10. What that would do is that'll bring you back inside the Friday low. Those two would be bullish scenarios. A bearish scenario would be you stay underneath here and then you get an expansion of volume. Thus far, there hasn't been an expansion of volume. And what that sets up is higher price. That's how that sets up. I'll go through the TLT right after we do this 30-year. The 30-year bond, folks, is really important to pay attention to also. The reason being is that the 30-year has been leading the whole time, meaning on the way up. The 30-year was way ahead of the 10-year, way ahead of the 5-year on the way up. On the way down, what has happened is that the contraction of volume is dramatic. Today, we've only done 257,000 contracts. That's a nice contraction from the 480 that we did on Friday. You're coming into the same January 6th time frame day. That had 576,000 contracts. The bottom of that we're right at right now. And so the clarity inside the 30 is pretty cool. The low of that is 146.20. No, 146, where is she? 146.28. We've hit 146.19 today. We're at 146.27 right now. We'll find out whether we get that rejection and close above the 146.28. But the way that is lined up thus far is saying we have the lighter volume. Now the key is going to be, will it reject that price? You have that, guess what? Game is on top side. The TLT, we take a look at the TLT. This is the TLT, folks, is the 20-year plus bond fund. Now the TLT, this is what is really cool about the TLT. The TLT is already in a confirmed ABC structure on the way up on a monthly basis. It's really hard to do a monthly ABC structure on the way up, number one. We broke topside. You went from 126 to 138. When we did that, what you have is that now you've pulled all the way back down to the 129 level. What does that mean? Well, it means it's a complex ABC structure on the way up now, as you know, and we'll see what kind of volume we get by the end of the month. Thus far, you've got some volume on this. This month alone, we've done 75 million, and we're not too far into the month right now. So we did 197 million as we broke that structure on the way up. We take a look at this on the daily basis, and on the daily basis, what it's doing, it's coming right into its sign of strength. And it's coming into that sign of strength with dramatically lighter volume. On Friday, what we had done, we had come down on 13 million shares. We have 6.3 million today. The 6.3 is going into the break topside area, and this is about as clean as you get. If you go back to the January 6th area, what you're going to see, we had 18 million shares there. So 6 million coming into 18 million. That's a beautiful thing, folks. Bonds are not done. Bonds are going higher. Wild. It's a wild one. This is Tom O'Brien. This is TFNN. Our phone number is 877-927-6648. Dow's up 133 right now. Nasdaq's up 58. S&Ps are up 19. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. TFNN.com. Take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. Give us a call, folks. Want to know what's going on in your world. And we were just talking about the world of bonds, folks, and bonds and notes. And so this is pretty wild because what was coming across the tape is this. So check this out. So yesterday, we had a $24 billion 3-year note auction. So anything under 5 years, they call notes, folks, right? Bottom line, since 2010, this auction, there was more foreign money that wanted those bonds since 2010. So for every bond that was out there was 3.34 bid on it. And that includes central banks, just so you understand how this works. And so you talk about a demand, and in fact, I'll bring this up for you. Let me just show you something, because when I just saw this come across, this is pretty wild. When you actually look at it, that you think in the context that central banks are also bidding for it. What you're looking, if you're watching Tiger TV right now, you're looking at all the rates, whether it's a 2-year, 3-year, 5-year, 7-year, 10-year, 15 and 30-year. And you're looking at the rates on all different countries. And, we've talked about this many times, okay? The 10-year is out of whack beyond belief. As you get down to the 3-year, it's not as bad, okay? But bottom line, our 3-year is still paying 1%, 1.02, okay? So that's what it went off at, too. Okay, so 3 years, you get 1.02. Well, picture this. If you're in France, bottom line, you're at 0.9%. You're in Germany, it's 0.8. You're in Spain, this is really bizarre, you're at 0.4. You can see all you have to do is shift money. What a great way to make money. This is like amazing, actually. They're paying, so Spain's paying 0.47. We're paying 1.02. So you float bonds in Spain. I'm talking about the central bank now, not just people. Central bank, you float bonds there. Guess what? You just turn it over, you double your money. You double your money, okay? It's pretty amazing. You double your money with no money. That's what makes this thing really wild. And if you think, well, anyway, you get the gist of it. So bond market, bottom line is that that bond market wants to go up. Yeah, and as our man Mitch is saying in Boston, when you're looking at this, on a 3-year note, Greece is paying 18.9%. On a 5-year note, they're paying 14.9. A 10-year, they're paying 9.9. But we know what's going to happen there, right? The bills aren't going to get paid. It's like anything else. And then as we're looking at the Swiss, that's right. You have to pay them to hold their money. And you can see that's why Apple is going to be floating the largest, one of the largest bond offerings out there, and they're going to do it in the franc. They're going to do it in the franc because what ends up happening is that they'll more than likely pay a few dollars out, but that's all it will be, is a few dollars. That's going to be pretty amazing watching how this whole thing does shake out. We're going to take a look at a couple of the larger Dow stocks out here. Well, actually, let's take a look and see what's moving the market out here. Inside the Dow Industrials, Coca-Cola is the leader inside the Dow Industrials. That's up $1.26. You get Pfizer up $1. United Health is up $2.58. That's trading at 109.07. Intel is up 74 at 33.67. Taken away from the Dow, Caterpillar. Caterpillar is down 74 cents. ExxonMobil's off 54. Chevron is down 45. And Visa is down 95. Let's go over and we'll take a look at this oil market, because the oil market, CL, let's go look at this. The oil market's getting hit out of here again today, and we'll see what kind of juice that this little baby is getting hit with right now. Oil is trading down, oh my God, 4.6%. It's pretty amazing when you think about it, that oil can actually trade down that far. That's something that we use each and every day. So oh yeah, this is going to be a trip. Okay, so oil. Yeah, we have a nice little bounce in oil. It's actually a really small bounce. We go from a price point of 44.37. First leg up, you get up to 55. You're backing it down today with 179,000 contracts. Now, that's not bad, actually. Yesterday, we pushed higher with 249,000. So what we'll see here is this. This is going to be cool, kind of cool how this will shake out. What you do if you decide that you do want to go long oil is that you'd be watching. It's already into the bar from February 5th. So what you do is you let it go to the bottom of that bar. You calculate the volume, and you look. What you're looking for is that you're looking for will you get a rejection of lower price at that bar or not? You get a rejection of lower price with lighter volume, then you get some action. Let's go to John in Winchester. Hey, John, what's going on?
Oh.
I know, man. I get pictures from my daughter. It's just unbelievable. I mean, folks, across the country, this is the most snow since 1978 in a matter of 30 days in that whole Boston and surrounding area. Pretty intense, right?
7 feet.
7 feet. I know. Listen, I got a picture of my daughter. She took it outside her window. And what happens, folks, is that everyone's walking in like a single line. I mean, it's just amazing. Come on down to Florida. Listen, it's not 75. It's only 60 today, but it's beautiful out.
I keep dragging my girlfriend down there saying, let's go, I'm ready.
Yeah, listen, man, it's jet blue. Right out of Logan Airport, man, your hair like nothing.
Oh, boy. Well, I got to make some money first, but what do you think about Intel?
Let's take a look at Intel. Intel's trading out at 33.67 right now. The high for the year is 37. The low is 24. Next time they already come out with their numbers. When they come out with their numbers, that's when Intel gapped away. You know, you get gapped down from this 35 into the 33 area. What I do is this: when Intel gapped down, so Intel's up 74 cents right now. It's coming into the bottom of the gap down is 33.55, and right now we are at 33.67. So I suspect you're looking to go short, and
yep.
It's 29.65 that it wants to trade to. So what I would do is this: I would first wait. If you had to close today under 33.55, I'd hit the button then, because you're going to have 15 million shares, and you're going into the gap down, folks, right now. Now, this is what ends up happening. So watch what happens with a test. This is testing the gap down today, Intel. If it holds the price where it is right now, John, right? Don't pull the trigger, because it's into the bar. So the bottom of that bar is 33.55, and it's 15 cents into it, okay? If it doesn't hold that, then you get a failure on price, a failure on volume. Because if it stays into the bar, what you'll do is you'll go to the top of the bar, which is 34.72.
Okay.
So that's the setup.
Where's the gap?
The gap was from the 26th. On the 26th of January, it closed at 35.81. And the following day, it opened up at 34.40. And the bottom of that day, the price spread that day was 34.72 to 33.55.
Oh, I see. Okay.
You see that? So what equities like to do, whether it's up or down, it's into the bar right now, but if you back off of that bar coming into the close, that's it. That's going to be the nice little structure to go after, because what you have here, folks, is this. You have that high volume low October 15th that it's already halfway down to, and that's what it wants to go after. Cooking, brother. Stay warm, man.
Thanks, Tom.
Okay, have a great one. Have a safe one. You stay right there, folks. Dow's up 152. Nasdaq's...
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Welcome back, folks. Dow Industrials right now up 147. You get the NASDAQ up 64. S&Ps are up 22. Percentage-wise, what you have out here is you get the Dow up 0.8%. S&Ps are up 1%. NASDAQ is up 1.6%. Overseas today, we had the DAX up 0.8%. The FTSE was flat. Let's go over and we'll take a look at good old Apple and see what's happening in the Apple world out here. And what you do have, when I was just speaking this a little bit earlier, what Apple is doing, which no doubt is really smart, is that they're putting out a monster bond offering, and they're doing it, folks, in Swiss francs. What does that do? Well, actually, they just did it, right? Apple sold 1.2 1.5 billion Swiss francs. That's 1.35 US. This morning, the iPhone maker sold 870 million francs of bonds maturing November of 2025 with a coupon rate of 3.375%. That's amazing, man. And 375 million francs due February 2030 with a coupon rate of 0.7%. The average yield on the investment-grade bonds in Switzerland is 0.42. So check this out. This is just amazing. So Apple got to use 875 million francs at we'll make it 0.4%. And that 0.4%, folks, they have that money until 2024. So you imagine how you can make money on that. That's as intense as you can get. That's amazing, actually. Then they got an additional 375 million francs. So in both cases, this is francs, and so in both cases, that's going to be more US dollars to spend, or any currency they like. They went out to 2030, so that's 15 years, and they paid 0.3% for that. So since April of this year, since April of 2013, Apple has sold $17 billion in bond offerings. There's no doubt it's smart. It's just free money. And it's not like they don't have the money. They have the money, but the money is overseas. Bottom line is that they can't use it. Well, they can't use it for the U.S. Operations. That's what that comes down to. But they could certainly use it to buy other things. Okay, so what are we looking at? Apple today, 51 million shares. When we came off the high out there, we came off the high with 83 million. So it's not that bad, really. We put this on a weekly basis, and what you're going to have on the weekly basis, it's not even going to be close. Well, what you have on the weekly basis is this. When it ran higher January 30th. We went from 109 to 120, huge volume, 465 million. Now you've overtaken this level, and thus far we've done 90 million. And, we'll see whether she can do 260 million. But at the end of the day, that would be the number. The number is if she wants to hold higher price, she's going to have to do over 260 million this week. And we'll see whether, in fact, she can do it. Thus far, it doesn't look like she's going to do it, but she's definitely over that price right now. And you can see on a fundamental basis, there's no doubt that when you're talking free money, that's about as intense as you can get. You can see when we talk currencies too, by the way, folks, what has happened in the currency markets, there's a couple different things that have happened in the currency markets. The first thing that has happened is that the large banks, the spreads in the currency markets have gone up dramatically. The reason being, of course, is that the scandal about the fix being in, the government's all over them. Bottom line, that is basically slowing them down. And now they're complaining that the spreads are too high. The spreads are too high because the bottom line is that now they have to have more transparency. So that, no doubt, is a trip. Let's go to Victor in Stoughton, Mass. Hey, Victor, what's going on?
Not much, Tom.
How you been, man?
Fine.
Good.
What do you think of Micron at this time?
Let's take a look. Micron's, it's up 256. And let's take a look here. So
volume is not there.
Excuse me?
Yeah. They have volume, but not that good.
Yeah, it's, the stock just went down from 36. Let's see what it looks like on a weekly. Okay. So what we have on the weekly is this. It had the high volume spike low here of 26.32 from October 15th. It just hasn't hit it yet. I'd still give it more time. It'll come get it. Just hasn't done it yet.
So this is not the time to go long.
Not yet. So what you have is this. So watch this. This is kind of intriguing, actually. And this is where it always gets dangerous, folks. It almost got to the low. The low that it's looking to go after. See, the week of October 13th, the week prior to that, the week of October 6th, we got to 27.59, and you had 224 million. The next week, you got to a lower low, and you had 213 million. That lower low is 26.32. Thus far, we've only got to 28.09. And that's always dangerous when they haven't been tested. Particularly, you got 2 separate weeks there. So, and then what you have also is that you have the week of January 16th, where the high of that is 32.99, the low is 28.51, and we had come down with 204 million. So what you can expect, Victor, is that, yeah, I can get up to the top of that, which is 32.99, and then it will probably fail. That's kind of like what Intel is doing right now when John from Winchester just called. Kind of the same deal. The difference is that Micron doesn't have as much of a gap down, but it went actually after the same October 15th swing low. You know, Micron just hadn't gone as high as Intel. Intel, what happened with Intel, folks, Intel, the October 15th low was 29. Intel runs up to 37. Now it's back at 33. That low there was only 26 and it ran up to, well, look at it. It's interesting. It's just how it ran up 10 points, you know, so.
I can go to 32, but that's about it.
Yeah, exactly.
Eyes.
Okay, man.
All right. Thank you.
Stay warm. Have a great one, man. Have a safe one. The inside the INDX 100, what we have out here pushing the INDX 100 up today is Micron. Micron's number one. That's up 269. You have Marriott International is up $4. That's a big number. 77.40. Wynn Resource is up 750. And Qualcomm is up 328. If we go back over to Wynn, let's look at Wynn Resorts for a second and see what we have in there. Okay, she's got some price going, but that more than likely is a dead cat bounce. Taking wind out of the INDX 100, you have Mattel is down 44 cents. Staples is off 18. We got Biogen down 111, and Seagate Technologies is off 14 cents. If we go over to those biotechs and we take a look at the biotechs, this is the IBB is up $5.31 right now. Volume is 664,000, and that's anemic beyond belief. And the biotechs yesterday went down with 1 million shares. They're going into monster, 3 million shares. So this is bottom line dead cat bounce in an extraordinary way in the biotechs. And the biotechs are something you want to absolutely wrap your head around, folks, because inside the NASDAQ 100, the biotechs, they come off those highs, and if they come off those highs with volume. The first leg down had volume. We're going back topside. The volume is contracting as we're going back topside. We'll see how this market wants to hold. Some of the high volume stocks in this low volume market right now, you have Pfizer's up $1. Qualcomm is up $3.29. Qualcomm, you talk about a business plan, man. It's pretty amazing watching and reading about Qualcomm, how that baby is going to be shaken out. Qualcomm is paying a $975 million fine to the to the Chinese government, and it's pretty cool when you can pay a $575 million fine and still be in business. Qualcomm has 2 separate gap-aways. Qualcomm's not done on the way down yet. You know, Qualcomm is off the high of the 79. Well, that's not that bad, is it? $81. Yeah, that's nothing. Went from 81 down to 62. It's trading at 70 right now. That put this. She's going to have to do 53. Well, we'll see. We'll see what she can do. I mean, Qualcomm still looks to me like it's set up for about 53. There's no juice at the highs. It come off the highs in January. Big volume on the way down. You get lighter volume on the way back up. That is setting up for a rebound downtown. So we'll see exactly how that does set up. Some of the other high volume stocks out here, you have Coca-Cola up $1.26. Halliburton is down 1. The XLE, if we go over to the XLE and we take a look at the XLE in the context that you have the oil pulling back, the oil service stocks themselves, they have been set up, and the way that they've been set up, XLE. You stay right there, folks. We'll bisect and dissect those oil service stocks as soon as we come back. Dow Industrials right now up 151. You get the NASDAQ up 65. S&Ps are up 22. We're going to be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Dow Industrials right now up 144. You get the Nasdaq up 64. S&Ps are up 22. Let's go and take a look at these E-mini futures as we're coming into the close out here, because what they're doing, ESH5, they are going after ESH5. Okay, let me put this on a 10-minute for you. You can see how this is shaking out. 10-minute. And we just, ESH5. I'm going to bring this back so you can see exactly what it's coming into right now. And it's pretty cool, actually. Oh, let me see how I do this. Whoops, that's too much. Sorry about this. Okay, here we go. This is what you have happening here. We are coming into the S&Ps right now. They're up 22. This is the futures at 2064. They've hit 2066. And what you're going to see is this. Friday morning, we got to a price point up there of 2067.75, right? No, 2068. That's what we did. We got up there, and we failed. The first run up, folks, at 0830, we had contracts of 53,000. Then what ended up happening is that we go downtown, and you go downtown with 72,000 contracts. You go back topside, and that's where it failed with 46,000 contracts, then tested again with 16,000. Okay, so now let's fast forward to right now, so you can see how this is testing it. It's testing it with dramatically lighter volume, and it's not going to make it. The top notch there was 27,000 that we hit at 1540 hours. So 27,000, this is what you do. You take the 27, we'll go right back into that level, and what you're going to see, the 27 is going into the 46. You're going to need a lot more juice to top it off out here. So we'll see. You have 7 minutes. So now watch how this shakes out. When you test highs or lows, and you're coming into it like this, okay? So we got to the 2066. We didn't hit the high. I'll give you the bullish case first. The bullish case would be that you hang up here, you go sideways for another 3 or 4 minutes, then you make the run, and you blow by this 2068. That'd be the bullish case. The bearish case would be that within the next couple minutes, we're going to see a swift downdraft, nothing heavy, but 3 or 4 S&P points, and you'll see volume come out on the way down. You get that? Guess what? That was the test, that would be it. That would be the test. Can't bust them up. You're going to bust them down again. Let's go to Jasmine in West Palm Beach. Hey, Jasmine, what's going on?
I'm looking at some gold, purchasing gold stocks. You have any suggestions at all?
What? So have you owned gold stocks before?
No, I never owned gold stocks. Silver Wheaton is the only one I've ever owned.
Well, you know what? You could buy Silver Wheaton again. I just bought it today. Silver Wheaton. Okay, let's go through Silver Wheaton. And inside the gold report, we bought it today. You get a free one here, okay? So let's look at what we have. So this is why I bought it. Okay, let me pull this back. Let me make this Silver Wheaton. And today is going to be interesting, folks, and this is why. So Silver Wheaton is trading at $22.16. And by the way, these look like they're ABC structures on the way up, which is wild. But this is what Silver Wheaton did. First off, when we came down on Friday was a big day, folks, because gold got smoked, had heavy volume. Silver Wheaton goes from 23 to 22.14, but first doesn't break a swing point. So you had an expansion of volume on the way down, but not what it was going into. It was going into 6 million shares, and Silver Wheaton did 4.8. Now what Silver Wheaton did today, It got under that. It got under the 22.14. It's trading at 22.16. You put a stop like a buck underneath this, man, and what you're going for is this. You're going for 27. It's an ABC. It looks like it's going to be an ABC up to the 27 area, Jasmine. And this is what you're going to need. Your confirmation will be as it gets into the into 24, 21. You're going to need more than 6 million shares. If you get more than 6 million shares as you get into that level, your probability goes higher that you have a 1-to-1 price projection and it's an ABC up. And what you should also get is this, by the way, folks, if you're wrapping your head around this. As we move higher, what you should see is you see the volume expand immediately, even before it's getting into that swing point. Because what we do have inside that gold and silver market right now is this. There's multiple ABC structures. Well, they look like multiple ABC structures on the way up. That brings the probability higher that they are, but it's also dangerous to make sure you put your stop in, because with too many of them set up at the same time, it's like, oh, man, you know, are you going to fail? Are you going to go? So if you watch the volume as it moves higher, you got the rejection of lower price out here today.
Right.
Once this thing starts moving like tomorrow or the next day, you're going to be looking for expansion of volume, and you're going to be looking for it immediately, too. And if this is an ABC structure in the way up, the definition goes like this, folks. Your first move, A to B, is a straight line move, which we already have. We've had the B to C. That's a consolidation. It goes all over the place. You're looking for another straight line move. That's what we're looking for.
And so you don't suggest any gold stocks?
I just gave you one.
Well, Silver Wheaton is a gold stock?
Yeah. Well, Silver Wheaton is a largest silver broker in the world.
Right.
It's a metal stock, though.
Okay. All right. Thank you so much.
Okay, man. Have a great one. Have a safe one. What is intriguing out here, even with gold down, folks, is that you do have some nice setups out here. In fact, there's quite a few good setups. What you also have out here, though, and this really be careful, is that some of the smaller gold stocks right now are coming back to their lower range, and it looks like they're going to test the lows again. So there is divergence, and I suspect what that divergence is about is how much cash they have on hand, okay? You know, and can they make it through the price structure itself, okay? That's kind of how this thing is set up right now. But as the structure of the ABCs, man, they're there. And what I have seen many times inside the gold market is right before they take off, you get a day like last Friday. You know, it gets slammed. They slam it with wide price spread. You have an expansion of volume, but yet it's not. In this case, it wasn't as big as we went topside on the January 15th level. So we'll see where the rest of this is going to shake out. If we go back to the S&Ps for a second, what you're going to see with the S&Ps is that that was the test, folks, and check it out. You talk about an expansion of volume off this, so check it out. We just got an expansion of volume bigger than the whole day. That operator sold right into it, big time. 45,000 contracts. See ya. Don't want to be ya. It's Tom O'Brien's TFNN. You stay right there. We're going to come right back. Dow up 132, Nasdaq up 60, S&P's up 20. We're going to be right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Sam in Irvine, California. Hey, Sam, what's going on?
Hi, Tom. How are you?
Doing great. You having a good day out there?
I'm having a great day. Thank you very much. I want to preface by saying that I'm so grateful to you and TFNN for you to assemble such a great people, such a team to help the small investors like myself.
Well, we appreciate you growling and prowling out here with us, Sam. Thank you so much.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, a safe day. Let's make it a safe night and a great night, folks. All you folks up in the Northeast, stay safe. You got all that snow, cold. This quote is by Natalie Goldberg. Follow what you love and it'll take you where you want to go. There's no doubt about that, folks. If you follow your heart, it'll happen. The head is the problem. Market-wise, let's take a look at it out here. We have the Dow Industrials up 139, Nasdaq up 61, S&P's up 20, gold contract down $7.90, trading at $1,233 an ounce. Silver down 17 cents at $16.89 an ounce. Platinum off 11 bucks at $1,208 an ounce. Copper down 3 pennies at $2.55 a pound. Light sweet crude off $2.34. Trading at a price point of 50.53. You got the 10-year down 9 ticks at 128.10. The 30-year off 25 ticks at 146.26. Both cases, the bonds, folks, they got down on dramatically lighter volume. They went under the Friday's low. Okay, Friday's low, that's where the expansion of volume, still lighter than the way up, but we had an expansion. So now what you have is it got under the low. You have lighter volume. Now we'll be looking for a rejection of lower price. King dollar up 253 ticks at 94.83. The euro down 12 at 113, and the yen up 79 at 119.43. Our phone number is 877-927-6648. Give us a call, folks. Well, I know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Okay, so first off, let's go take a look at the futures, and what we have inside the futures here is this, folks. Bottom line, we put this baby up. We'll put this on the daily, and what you're going to see is that we are, there she is. Okay, so we're at 2062.75. What we've done is this. You have gone higher. We have lighter volume. It's the same volume as yesterday, which is pretty amazing, which is light volume, by the way. They couldn't bust it down, want to bust it up. What we're doing right now is that we're coming into the downdraft that was out there from the 23rd, which is 2062.50, which you held, by the way, as well as the downdraft from the 5th, which is 2048. So you're at 2062. We had got to a 2066. Bottom line, this is about as close as you can get. The 23rd, you're right at that price point. So what that says is that if we go back and we take the volume from the 23rd and we watch how this baby shakes out, the 23rd, we had 784 million. Today we did 785. And so what that does set up is that you could get to a higher high. Right now, the SPY is trading at 206.81, and the high on Monday was 207.24. That'll go after that high. That's how that baby is set up right now. That's short term. Longer term, October 15th is still game, folks. And longer term is not going to be, long term. The 3 Qs. What do we have inside the 3 Qs? The NDX 100. 3 Qs today, we go up to a price point of 104.40. You did 23 million shares. The way that what we're going into, number one, is the 34 million on the way down. Yesterday we did 23 million on the way down. The swing point that the 3 Qs are going into is 104.58. That is from the 23rd. Gold. What do we have with the gold contract? What we have with gold is this. Gold contract got to a lower price point today, has light volume. Gold is testing Friday's low. That's 1228.20. We hit 1230.60. We did that today on 91,000 contracts versus the downdraft that we had out there on Friday. And on Friday, we were trading 205,000 contracts. It would have been much better, being a bull in gold, that it actually would hit the 2820 out here today. We didn't hit it. Bottom line, it would have been a lot nicer if it did hit it. We go to the bond market. Okay, so first you look at the 10-year bond. what we have with the 10-year and the 30-year, by the way, is this. They both went lower today with dramatically lighter volume. So the selling has contracted. Now what you're going to be looking for is a rejection of lower price. They both, the 10-year and the 30-year, are going into their strength from the 6th of January. The low of that, and the 10-year is 127.23. We're at 128.09 right now. So in that context, meaning the 10-year and the 30-year, those still want higher price. You know, when we were looking at the 10 and the 30-year on Friday, that was the first time in a long time that they actually come down with volume, with juice behind the move. The volume that they were coming down with was less than the 6th as well as the 22nd of January. And what happens, folks, is this. In order to basically stop a move that is accelerating and change a whole trend, you need the price and the volume going. What we had out here today, the volume just stopped right in its tracks. That basically is saying that, guess what? Now you're going to build some cars. The cars you're going to build is for higher price once again. We will need the rejection of lower price. Dollar. King dollar. Now, this is the number, folks, okay? So, king dollar, today, sideways move. We did 32,000 contracts. Now, 32,000 contracts is anemic when you're where we are right now. This is why. King dollar had come down on February 3rd, and we came down with some real juice. On February 3rd, we came down with 58,000 contracts. We went back topside Monday, with 48,000. So that was pretty good. That was real good, actually. Okay. Now you're hanging up here, though, but what you're doing is that you're hanging at highs with dramatically lighter volume. When markets wants to push highs and take them out, they'll push it with volume. So that's telling me that King Dollar is going to get tested again at that 93.38 area. Akamai, AKAM. Akamai Technologies. This just come out with numbers. Let's see what they're doing after hours here. AKAM. Akamai closed at $62.21. Akamai right now is trading at 62.27, so it did bounce up a couple points, but it already gave that back. Let's see what they have to say. Akamai, the estimate was 63 cents. They made 70 cents. The revenue was $526 million. They made $536 million. Kind of intriguing that that this doesn't hold, however. So that is really interesting. AVGO, Avco Technology. Let's go take a look at Avco Technology. Avco closed at 107.04. That is trading right now at 105. AVGO. Let's see what Avco has to say. This is a semiconductor product company, radio frequency microwave components. That closed at 107. Numbers go like this in Avco. Oh, this is interesting. Actually, what's going on here, I think, is... So it looks to me like, one second. No, this is, you know what this is from, folks? This is from someone else missing their numbers. This is from MediaTek, first quarter revenue missing their numbers. Skyworks is trading down 5%. Avco's down 2.4%. Yeah, that's what this is all about. It's pretty wild, man. No doubt about it. Let's go to Terry in Orlando. Hey, Terry, what's going on?
Hey, Tom. Nice day over here today. I guess you are too. It's high 60s and certainly no snow like Boston's got.
No. Hey, you stay right there. We're going to be right back, all right?
Okay.
This is Tom O'Brien. This is TFNN. Our phone number is 877-927-6648. Dow Industrials closed up 139. NASDAQ up 61. S&P's up 19. We're going to be right back. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So we're talking with Terry from Orlando, and we're going to be talking about Franco-Nevada, FNV. Is that correct, Terry?
That's it. You know, I was in this with you. We got stopped out, and it came down today, but it came down a little bit higher volume. I just wondered where I kind of like this stock. I don't know. I'd like to get back into it. I just don't know where the price point would be.
Right. So let's take a look at it. Franco-Nevada, folks, had gone from a price point of 45 up to this 58. We were in it. We made like 4 points. When it came down on the 29th, that's when I raised the stop. That's when we got taken out of it. I wouldn't be buying this right here. You already got the gold report from today, so if we were going to buy it, I would have bought it back already. And what you had is that you had an expansion of volume. You did 1.4 million, taking out that little swing there, right? Mm-hmm. Now, what we are doing is that you're coming into the 15th, and you're coming into the 15th with a lot lighter volume. So I see what you're looking at. But when that happens, you want to let it get to the low of that. You see how it already got into the 54?
Right.
The high of that is 54.04, folks. And once it gets into the high of it, and this morning even it was into it, by about $1. So it was like, okay, now you're going to go to the bottom of that. So it's 50.90. That's how that's set up.
Okay. And then one other question. Do you ever use the gold cross or death cross as any kind of indicators for technical?
No.
Okay. I just didn't know.
You do have to pay attention to them. I mean, it's
yeah.
If you, that is a problem, but I don't. I mean, the art of time of the trade is it's price and volume and pattern structure and Fibonacci. That's it. Yeah.
Okay.
Cooking, brother.
All right, thanks.
Have a great one, man. Have a safe one. Now, folks, let's go over to our man, Mr. Andy Heck. And don't forget, every Tuesday, Thursday, right after my program, 5 to 6 Eastern Standard Time, Andy has a great program, also has a great newsletter. You can check all of that out right on the front page of TFNN. And as you're over at TFNN, folks, it couldn't be a better time that Andy's doing a workshop for us and for all of us. And this is going to be on February 25th. It's free. And guess what it's on, folks? Crude oil, what every investor needs to know. So check it out. Come on over, sign up. It's free. It's going to be an outstanding workshop. Everything Andy does inside that commodity market is just absolutely fabulous. And what you do have out here now is that bottom line is that commodities are basically throwing people off in a big way. In fact, one of the largest and most successful fund managers out here, Leon Cooperman, came in with a 2% loss last year in his fund, which is really unheard of, because the guy was always making like at least 11%. And he just came out with an apology letter, but bottom line, he got hit by the energy stocks. Andy Heck, what's going on?
Hey, Tom, how are you?
I'm doing great, man. You having a good day?
Good. Yeah, everything's good. Everything's good. Looking forward to that workshop on February 25th. That, we have to wait and see how these markets suss out between now and then. But I scheduled it for the end of February because I want it to be just at the end of winter, beginning of spring.
Yes.
So we can take a look at those markets. One thing I wanted to mention, I told you in December that I had graduated to become the #1 contributor on commodities.
On Seeking Alpha, yeah.
On Seeking Alpha. Well, yesterday I also became their #1 contributor on gold and precious metals.
That's a beautiful thing. Congratulations, man. I like it.
Pretty cool.
It's huge. It's huge, man.
So I got a lot of new pieces out this week, and all kinds of interesting things. Let's talk a little bit about gold, because I think gold is interesting here. And I heard your comments, and I'm a little torn, Tom.
That's all right.
I'll tell you why. First of all, gold, if I look at the divergence between silver prices and platinum prices and gold,
yes,
they're telling me that either silver and platinum are too cheap or gold is too expensive.
Okay.
Based on the, the intercommodity spread.
Sure.
Platinum's a $25 discount to gold. Silver-gold ratio's up above 73 to 1. So that's what they're telling me. However, on the bullish side, what I'm seeing here, and I'll put this chart up here, very interesting. So we've come down from about 1308, right, in January. And at the same time, volume has gone down with price. So that's not bearish. But even more or less bearish and kind of bullish is that open interest has gone from 454 plus thousand contracts down to 394,000. So that's a 13% decrease in open interest. And when open interest goes down with price, that is not a bearish sign. If we were seeing open interest increasing and more selling coming to the market, that would be bearish. So technically, I'm kind of bullish. Fundamentally, I'm kind of on the fence because of the divergences we're seeing between the silver price, the gold price, and the platinum price here.
Yeah. No, listen, it's tricky in here. There's no doubt. I like how the setup is, particularly because we had high volume on Friday. but yet it was lighter than January 15th. And I've seen how they can crush this thing, not just gold, just markets in general.
Oh, I
we
agree.
got underneath it today. Where I'm going, Andy, is even yesterday when gold was down, they couldn't knock some of these equities down. So it's possible that the equities themselves are just going to go higher first and drag gold up.
Right.
And we'll see. And you know where there's no doubt. See, I continue to think that the dollar is topped out, and I know that you don't, and that's cool. I mean, but that's how this. And we'll see where this shakes out, because the dollar today to me, it should have had more volume up there. But you know.
We'll see. We'll see what happens. You know, it's a kind of conjecture. They're all at interesting prices.
Oh, they're
no question.
There's no doubt.
So let's switch gears and talk about oil here.
Yeah,
so
oil.
I have an oil article out today called and Dave White helped me with the title, so I have to give kudos to him.
Oh, cool.
It's called Thinking and Hoping and Wishing and Praying.
Oh, I saw it this morning. I saw it come across this morning. Hey, folks, this is a great one. I did. I saw that coming across this morning.
And it's about OPEC.
And folks, he got the editor's pick on that. I saw that coming across. Right? That's the one you got the editor's pick on, right?
Yeah. That's it's kind of a glitchy title, but
that's good.
You know what I'm saying here is basically OPEC. OPEC is, you got two schools in OPEC. You got the haves and the have-nots. The Saudis and the other Gulf-producing states, the low-cost guys, they're the haves.
Yes.
They control that, and the Saudis control that. The other guys, the Nigerias, Venezuelas, Angolas, Ecuadors, Irans, Iraqs, they're the have-nots. And they're the guys who are thinking and hoping and praying and wishing.
Yeah.
And the Saudis are the ones who are doing. And, when al-Badri, who's the general secretary of OPEC, comes out and says, hey, if there's no investment here, we're going to see $200 a barrel, that's kind of a hoping statement.
Oh, totally. I know.
These guys. So, it's very interesting to watch what comes out of there. What I'm seeing in crude oil is the following. I'm seeing divergence all over the place.
Okay.
Crack spreads. Bullish, very bullish. The cracks, that gasoline crack that was under, like $7 or so in January, it's $15.30 today.
So now, is that bullish for the?
It's bullish for products. It's bullish for products.
But for the barrels of oil too, or just for products?
Well, let me continue.
Okay, stay right there. A quick break.
Oh, okay.
Cool. Andy Heck, Tom O'Brien. Folks, come over to our website at TFNN. You can see right in the front page, our man, Mr. Andy Heck, he's having a webinar. It's free. It's going to be about what you should know about the oil market, the crack spreads, the contangos, all the above. You stay right there. We'll come right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the path of least resistance under trading newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We're talking with our man, Mr. Andy Hecht, right here at TFNN. And don't forget, folks, all the programming at TFNN, we start live programming 8 o'clock in the morning every trading day. We go from 8 to 6 live programming. Get it all right in your cell phone at tfnn.mobi. If you'd like to get Tiger TV, the video plus the audio, just go to tfnn.com, hit the camera on the top right-hand side. You get the video as well as the audio. And, of course, don't forget, every Tuesday, Thursday, right after I'm off, I'm Mr. Andy Hecht is going to be growling and prowling with you, walking you through the commodity markets. And right now, we're talking with Andy. We're talking about crude oil. So, what do we have out here?
Let's piece this down. So we started before the break talking about crack spreads.
Yes.
Crack spreads are expanding, which means demand for products are up. The demand for gasoline is going up because, it's cheap. And people are going to
when I go out Sunday, so much traffic. I mean, we have a huge amount of traffic in Florida right now anyway because the snowbirds are here. But I can see that, hey, listen, everyone's taking a Sunday drive.
That's right. It's going to get worse.
And when's the last time they took a Sunday drive? I mean, forget it.
Spring training's coming into town, too. So, it's even going to get worse, right?
Totally.
All right. So oil, heating oil is also going up. That crack spread's up $1.20 today. It's almost $27 a barrel. So that's bullish. Rig counts are going down. That's bullish.
Yes.
But term structure The difference between March 2015 to March 2016 crude is at 21%. That says there's no supply problems at all. That's bearish.
Okay.
So, you know, you got term structure bearish. You got the Brent WTI spread that's gone out to over $6 here. That's telling us that the U.S. has plenty of crude oil. That's also bearish. So you have the Citigroup analyst coming out yesterday saying that oil's going down to a 20 handle. You got the Credit Suisse analyst.
I know. He just wanted to make a name for himself, right?
Right. You got the Credit Suisse analyst coming out this morning on CNBC saying this is a great place to start buying energy. The bottom line, Tom, is the market's balanced. It's in a range between 45 and 55, and no one really knows where it's going.
You know, it was interesting. Did you hear that interview? So the guy, that Saudi prince, right, that runs that big fund.
Al-Walid.
Yeah, he was, I think we talked about this, I guess, last time you were on. He was on CNBC saying, we're never going to see $100 oil again.
Right. I mean, that's amazing. I put that in that article I wrote.
Yeah.
That, you know, that al-Badri, the Libyan general secretary of OPEC, says you're going to see $200 a barrel. And you got Al-Walid, member of the Saudi royal family, who's really plugged in, saying you'll never see 100 again.
I know.
So you know what? To me, the bottom line here is you got to watch all of the inputs, what's going on. Eventually, we'll work off these surpluses. Eventually, the rig counts will going down, so we're not going to have as much supply. Hey, another big thing that I saw that a lot of people aren't talking about is what's going on in Brazil with Petrobras. You've been following that?
That's huge.
You know, Warren Buffett once said that, you know, you only find out who's not wearing a bathing suit when the tide goes out.
Boy, and they're not wearing a bathing suit, right?
Oh, in Brazil? No, they've been stealing from that company for years. And kind of it really came to a head last week when the CEO had to resign. And the CEO is very friendly with the president of Brazil, who, by the way, used to be the chairman of Petrobras.
Oh, that's crazy.
So,
well, you know what's so crazy about that, folks? This morning, right? Valley, okay, V-A-L-E. Valley looks like it's almost making a bottom, folks, okay? But what happened is that I'm looking at him saying to myself, you know what? I'm going to make that have another sign of strength. And what was in the back of my head, now check this out, because what happened there is that this is a stock that's got killed, folks. But because it was also in Brazil, I'm saying to myself, you know what? That needs another sign of strength, because I would say it's unusual that you have only one large company that something is wrong with. Do you know what I'm saying?
Right, exactly. It's more endemic of the entire market and the whole culture there. The bottom line there that I'm concerned about is that, you know, Petrobras, there's a lot of, they're the biggest they're one of the big oil producers in South America. I mean, of course, Venezuela is the biggest, but, you know, they have a lot of proven reserves. With their capital base, they're not going to be able to borrow money. They're not going to be able to get that oil out. And that's kind of, you know, oil barrels that are counted in the current price. And, you know, no one's really kind of discounting the fact that that supply might not be there. Now, the other thing is that stock has gone from $70, over $70 to $6.
Right.
And I wonder whether China isn't going to step in and say, hey, this is a juicy time to maybe take over Petrobras and buy those shares.
Well,
what are they going to spend $40 billion for 8 billion barrels of oil? Sounds like a good deal to me.
The way they do it now, folks, there's a trade out here, and it's the bond trade. It's the bonds. They have so many bonds out here, folks, and right now those bonds are trading like really bad. I mean, and if someone comes after them, that's how I think they'll do it.
It's an asymmetric play. You buy the bonds for pennies on the dollar, and that is the trade. You stay away from the equity.
Because you remember when they found that big, deep drilling that they were supposed to have more oil than the Saudis and more oil than anyone, they pushed so many bonds out at that point. It was insane. So
exactly. And you know what? And commodity prices were roaring, and everyone's making money in Brazil, and they're skimming off the top, and all of a sudden, the tide goes out, the prices go down, and everything gets exposed.
It's amazing
it's kind of amazing.
It's amazing that it's the president, though. Yeah, that's intense.
Well, I don't know if it goes up there. I mean, but she was the chairman of Petrobras.
Yeah, of course it goes up there, though. Hey, where the head goes, the rest of the body goes, right? I mean,
that's you know, between the graft and the corruption there, and then what you see in Argentina, it's amazing.
Oh man, Argentina. That's going to go back to, they're going to be finding bodies everywhere there, man. That's crazy.
They find bodies. But you know what? These countries, they have a habit of declaring bankruptcy and coming out.
I know. Listen, man, it's amazing.
The bricks, they sink to the bottom, but somehow when they get there, they float back to the top. Maybe that's the title for another article.
Oh my God, unreal. Well, listen, man, we really appreciate all the great education. And folks, February 25th, you can come over to our website right now at TFNN. You're going to see it right in the carousel. You can sign up right now. February 25th, going to be a great workshop. And they'll be explaining exactly what you should be looking for in the oil market, because it's so neat. You know, it's amazing, Andy. It's just so neat that something that we use every single day, and we use so much of it, can fluctuate so dramatically. It's like,
oh yeah.
I mean, that's intense, man.
Well, hey, it's what I said in the article. It's gone from a double black diamond ski slope on the chart to a roller coaster.
Oh, baby.
So it's a trader's market now, but you got to be careful. You got to have tight stops, and you got to take profits when they're there.
The hardest thing, and this is something, folks, okay, this is going to hit, economies across our country. I mean, the larger part, I think, I'm elated that we get $2 gas, and I think everyone's going to do great because of that. But people are going to lose a lot of good jobs. This is going to hit. It's going to hit Oklahoma. It's going to hit Texas. It's going to hit Alaska.
It's a mixed blessing. There's no question about it.
Yeah.
No question about it.
Okay, brother. You have a great one and a safe one. We look for the show in 15 minutes.
Thanks so much.
Awesome,
See
man.
you guys soon.
Have a great one. Have a safe one. And what you will see out here, folks, is that there is no doubt. Halliburton come out today. Halliburton is getting laying off 8% of its. So that's 6,400 people. Halliburton closed at $42. They're cutting up to, Halliburton is cutting as much as 8% of their global force of more than 80,000 as it confronts a collapse in the oil price and brings jobs reduction in line with its largest competitors. But the bottom line is that you're going to see there's going to be quite a bit of that. The real key is going to be, do they stay? Are these prices staying down here? That's going to be a big number. If in fact they stay down here. Let's go to PIR. Let's see with. Oh man, this thing is really getting whacked. Okay, Pier 1 imports. Let me go to the 10-minute. Let me look at this thing. If I'm looking at this correctly, I guess I am looking at it correctly. Good old Pier 1 imports gave it up again. So Pier 1 imports right now is trading down. It closed at $17. It's trading PIR. It's trading at 11. Closed at $16.97. It's trading at $11.99. Numbers go like this in PIR. They see their earnings per share at 80 to 83 cents. They had seen almost $1. Okay, so that's down 20%. They overestimated the recapture of lost sales from last year's storms. They also cited unplanned supply chain expenses, some which continued in the first quarter. Their gross margin is 40.02. The estimate was 41. They see inventory year end at $480 million. And the CEO, they just basically retired him. The executive vice president is going to be the interim CEO. And Turner has been the CEO. So Turner, Turner was the CFO from 1999. Bottom line is that that is a big hit. Holy cow, that is a monster hit. Let's go look at that daily for a second. See what that sets up to be. Oh man, this is We'll bisect and dissect this on the way back, but that was wide open. There's gaps below it wide open. There's no volume up there. Oh man, this is a classic technical setup. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Tom O'Brien.
Welcome back, folks, and don't forget, Mr. Andy Hicks coming up right after this program's over in 12 minutes. Pier 1 imports, okay, so Pier 1, folks, the low for the year is 11.42, the high is 20.15, and what you have here is that after hours, this is down $4. It's trading out at 11.69, and when you take a look at this, I'll bring this back a bit and put this on a weekly. You're going to see how equities, they will come up to gap downs, they give it up, and they give it up in spades. What you're going to see here is that if we take a look at Pier 1, Pier 1 was trading out at $23 going back to the September time frame. It came off that high with volume, monster volume, in fact, okay? And that's always dangerous when you're coming off a high with big volume. That little baby had topped out in May of 2013. This is pretty intense. When you take a look at this, folks, what you're seeing is this. You topped out in May with zero volume. I mean, light volume extraordinary. You're talking up at that high up there, we were talking about 5.3 million shares. Then you come off the high with 27 million shares. So you top out with 5.3 on a weekly. You come off it with 27 million. That's when we went from 23 to 20. Next leg down, you went from 18 to 15 with 29 million. Then next leg down, you went down with 40 million. Now, what it had done with the 40 million on the way down, and this is where, if you have high volume swing lows, folks, let them get tested, because this equity just made its way up from October. October was at 11.42, made its way back up to the $16 area, and what you're going to see is this. Last week, we did 7 million shares. So 7 million shares was going against 29 million. That's what was happening. That was 2 weeks ago, rather. Last week, we turned around and did 6.3 million. So that number one is your supply line. There's no juice whatsoever. You've already come down from a price point of 26, and then a let's go again. Now, as this let's go again, what this is going to go after now is, I suspect, a much larger ABC structure on the way down. The reason being is that if we bring this back a bit further, what you're going to see, let me put this now on a monthly basis. We put this on a monthly basis, you're going to see that this is an equity that came off its low in 2008. That low was 35 cents. So it came off a huge low. Now, where can it go? Well, the way this is set up right now, it looks like 875. So if you'll, I wouldn't be liking this period, okay? The reason being is that that looks like it was just a whole dead cat bounce the whole way. Pier 1 at one point had traded at a price point of 26. In 2004, went down to 35 cents, made it all the way back to 25. Now you came off that 25 with monster volume. So bottom line is that that is some heavy destruction, big time too. After the closeout here, Akamai had a little juice. Numbers were good on Akamai. Not holding the juice, though. Akamai had traded up to $64. That closed at $62.21. That right now is trading out at the 62. FSLR, let's see what First Solar is doing out here. First Solar closed at $48.51. That was up $2. It's trading up another buck right now. In First Solar, this is about an Apple announcement. Apple is partnering with First Solar, an $850 million. Apple is investing $848 million in a solar farm to harvest electricity in a partnership with First Solar. Apple received power from the 130 megawatt First Solar California flat solar project in Monterey County under a 25-year power purchase agreement. The company said in a statement Tuesday, First Solar shares rose 2.1% in extended trading. If we do go over and we take a look at how First Solar is trading, FSLR. Take this, we'll put this on a daily basis first. So this is an equity that also has got toasted and roasted. You talk about coming down off 74. Oh, this could get interesting. Okay, so when we take a look at this, if I bring this back for a couple years, I'll bring this back on a weekly, what you're going to see is this. This has come back into the last time it had any volume, which was $41. Okay, it went to 39. Okay, so this had gone topside, folks, April of 2012. It went from a price point of 26 to 41, had the juice in it, continued higher, got all the way up to 73, had decent volume there, finished more than like an ABC structure on the way up, tested that structure, had no volume, now comes all the way back to that sign of strength. I would let First Solar first get a big sign of strength before you walk into First Solar, because right now that hasn't had, all that's had on a continual basis is selling on the way down. The bond market out here, we'll see where this shakes out tomorrow, but what you do have in the bond market is that we got under the lows. You have lighter volume. What we're looking for now is we're looking for a rejection of lower price. Dollar index. What we have with the dollar index is this. Dollar index closed at its highs. Light volume up at these highs. And most times when you're seeing if a high is going to be broken, you're going to push into that high. And as you push into that high, you're going to have an expansion with volume, particularly after how we came down on February 3rd. And the dollar index, folks, is absolutely crucial to keep your head wrapped around. The reason being is that it affects, on a fundamental basis, it's affecting earnings in a huge way. You got to figure 40% of the earnings of the S&P 500 are overseas. So when they get repatriated, it's big money. That's the first part. Second part's basically more important, though. Right now, every time the dollar moves lower, the market can't stand it. The dollar moves higher, market loves it. Not quite sure why that correlation is out there, but it's out there in spades. You can see dollar's up 258 today, market's up $1.39. It's subtle, but it's out there. So we'll see how this whole thing shakes out. First time gold, that's going to be the wild card out here, no doubt, because what we do have with gold, that had gone lower on Friday, had higher volume, but yet it was lighter volume than January 15th. That's what it's going into. The low of January 15th is 1227.20. We got down here. Oh, this is good. Hey, it's saying we got to 1245 today. No, 1230. I knew that, wasn't it? You stay right there, folks. The man, Mr. Andy Heck's going to be coming up next, growling and prowling with you. And always remember, whatever you think about, you bring about. Whatever you focus on grows, and whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, fly with it. Everything you need is right inside you. Grab it and have a blast with it. Thanks for being here, folks. Look for you speaking it right tomorrow.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com.